Guruprasad Srinivasan, CEO, and Kamal Hoda, CFO of Quess Corp, joining us now. Very good morning to you, gentlemen, and thank you for speaking with us here at NDTV Profit. Well, the year-on-year numbers look good. Quarterly numbers have seen a bit of squeeze on the EBIT margins and the EBIT as well. Is that a seasonal impact? Can you give us sort of an overview of the quarter? Let me start with that question to Mr. Srinivasan.
Sure. Thank you so much for having us on the show. Year on year we have grown by revenue 14%, and as we stepped into Q1 of FY25, it's been a fantastic start, and we have added about 30,000 by headcount in Q1 in itself, and this is sum total of what we have done in Q3 and Q4. So it's a good start. And the second call out is we have crossed about 5,000 crore of quarterly revenue. And again, a good milestone to cross, and consistently we'll move forward from here. And as we stepped into the year, our sales have been very strong. We have done about 160 plus acquisition of new customers with an ACV of 660 crores. So to your point, Q1 has some seasonal effect. It is by plan, and specifically comes from our GTS business. We have one of the business in our GTS platform, which is into specific for the BFSI segment in terms of collections. So they taper down a bit in Q1. And as part of our asset maintenance business, we do cater to food and beverage segment, specifically for university institutions. And due to the seasonal, close of vacation in institutions, that business actually tapers down a bit. And these two are high margin business, and this will have a seasonal impact in Q1. But as we step into Q2, they will start recovering back. So that's the trajectory for us to start with.
So no, I get it. So summer vacations has one impact as well. So just to follow up on that, Mr. Srinivasan, then which is expected to be your best quarter? Because your PAT year on year is up 132%. What are the kind of margins you think you will see in Q2 and going forward?
So while we don't give a guidance on the margin, but if you look at our trajectory has been that we have been able to grow at anywhere between 12 to 14% year on year, and that we have demonstrated continuously. So with our best of quarters are normally Q2 and Q3 because being seasonal in nature. And of course, for few set of our businesses, Q4, like GTS is Q4 is good. So from that standpoint, I think we should be able to deliver online to our plan. And with regard to our margins, currently we are about 3.7%, and some about 20 basis points would recover as we move back into Q2 and Q3. And by end of FY25, we should be close to about 4%.
Srinivasan, why don't you tell us about the rest of FY25? How many new clients have you added across the board? And how sticky are these clients? Are they usually, recurring revenue that your company manages with these clients that you own? Or are these one-offs? And also the split between the global clients added and the local clients added?
Sure. So, most of our businesses are annuity, and we tend to sign any contracts between 1 to 3 years, and they continue in terms of recurring both revenue as well as the realization that we get from these accounts. And we have strengthened our sales team across both domestic and international geographies. If you look at the way we have started our Q1 in itself is a great start. And what happens is generally when in sales, what we acquire now will start delivering post H2 in terms of in its full form. So what we right now in Q1 and Q2 is largely what we would have signed between H2 of previous year. So from that standpoint, I think we are well slated for the year. The other attention that I would like to bring is the kind of the budgetary announcement which has been specifically the sector that we cater to, specific to skilling, employment, manufacturing orientation that has come into. That is going to also benefit a lot. Quess has to benefit a lot in terms of creating more freshers coming into workforce and employment. So which we have still not completely budgeted in our AOPs.
Hoda, if you want to come in, Mr. Hoda, and give me a sense of expansion, because historically you'll have gone out and acquired small companies, but there has been a lot of growth coming in from inorganic expansion. Is that the plan going ahead as well for FY25? What have you earmarked in terms of expansion, and how would you be looking to fund it?
Yeah, thanks for this question. So we've been, if you see last 3 years, we've been pretty much focused on organic growth rather than inorganic growth. Some of our past acquisitions have worked wonderfully well for us. But right now, as we've announced a scheme of demerger with a mirror shareholding, the entire focus is on getting the best out of the present set of operations and grow organically, and also work with the regulators and get the demerger process completed on time. So there are no plans of any active inorganic growth that we have for this year.
Okay. Now, Mr. Hoda, looking at seasonality, and as we understood that Q1 might have a bit of a seasonality, but overall, things notwithstanding, with the leg up that the budget gives to skill hiring, plus the kind of cost pressures that you might be seeing, would you reckon that on an increased base, there is a probability of upping the performance on the operational metrics? Or do you believe that for a business like yours, whether for you or for your peers, this is about the margin set that you would maintain, and you would rather focus on growth as opposed to margins?
No, so the focus is on both. See, the growth, I think, is an opportunity right now, and especially like you mentioned, I think the budget has opened up those growth opportunities for all companies which are into this space. First time we have seen, announcements which are linked to formalization, linked to EPFO, bringing women into workforce. In India, as compared to other global economies, I think the share of women participation in the workforce. So there are specific announcements to get more women in the workforce. There are, in addition to the PLI schemes in manufacturing, there are ELI, employee linked incentive schemes for the manufacturing that we saw for the first time in the budget. So as far as the growth or the revenue targets are concerned, we are very bullish, and we hope that we'll be able to deliver better than what we had planned for this year. And as far as margins is concerned, as we explained, Q1 is a quarter where we experience seasonality for some of our high margin businesses. So we are at around 3.7%. We have clear visibility of taking this margin up to crossing of 4% as we progress through the year. So the focus is on both the areas, growing volume as well as growing profitability.
Mr. Srinivasan, good morning to you. Long time that we've spoken, but I was wanting to understand what are the timelines for this demerger, and is there a base case of what's the kind of value unlocking that can happen? Is that the principal reason for this process?
Yeah, Neeraj, thanks for that question. And we are working towards that in terms of demerger a lot. If you look at, there are three elements. One, how are we strengthening our leadership as we move forward close to the demerger? How are we going to get our leadership strength and capability building? So that's one stream of work that we are doing. The second stream of work is this process generally take anywhere between 12 to 15 months, and we have already announced it. So as of now, it's progressing well. Everything is on track. So since our cases, we see it as largely it's a mirror shareholding, so there's no complication involved. It should definitely sail through well. And the other part is, why did we do even at this point in time? Because each of our business are at its position of strength. GTS is delivering about 17 to 18% EBITDA margins, and by size, they're almost about close to about 2,700, 3,000 crores. We have a clear path as to how we can take that business in a long term to $1 billion by size, and we have also strengthened the leadership, in that sector. Second, with regard to our workforce, it has been our signature business, and we have been growing very aggressively, and we have been bullish about India market. The way the investments are happening in India in terms of capex, and if you look at the latest retail FMCG consumption report, rural consumption has gone almost about 7.76%. It has beaten the urban consumption. So, which means it is also reflecting the way we are hiring people in tier 3, tier 4 cities. the demand also is coming from there. So this business we are always bullish about, and we want to take this business to be globally number one in workforce. And with regard to our asset management, there's so much of capex investment happening, starting from infrastructure to public utility spaces, healthcare, and we see a lot of contribution or consolidation happening in that space. And it is also a it's a volume come value business for us. And I mean, we have substantial revenue close to about 3,000 crores coming in from there, and this business will do well as infrastructure grows well. So sheer from position of strength, each of them are in the right place for us to put them into individual independent listed companies as and when the legal process completes. So we are quite happy the way the unlocking would happen as we move forward.
Is there a timeline in mind for this process to be completed, or it's a wait and watch, Mr. Srinivasan?
So it will take about 12 to 15 months, as I
Okay.
said. So we are, we have already filed, so probably mid of next year by this time, we should be definitely there.
Just want to get a trend check, and let me come to Mr. Hoda on this question. Just want to understand what is happening with ITES. The commentary we're hearing tells us that there is an initial sort of an uptick in hiring in this space. Are you seeing it as well? Can you give us some color on what your expectations are here?
Yeah, sure. So, see, we are seeing that as well, some green shoots. So the open mandates are up 36% as far as the IT business is concerned. So it used to be around 1,000 to 1,100 positions. We are seeing right now around 1,400 positions in the IT hiring space. And within that, our share on hiring has been more focused towards GCC. So, almost 70% of the open mandates that we are working is towards GCCs, which are high margin businesses for us. So, and if you follow the results of all the IT companies which have recently come, they've also started hiring. So yeah, it's all looking that the IT hiring should be back, and that should also further boost our profitability and margins.
All right. Okay. So green shoots in ITES, that's good news, definitely. Thank you so much for joining us, Mr. Srinivasan and Mr. Hoda. We're speaking to Quess Corp management there.